Hello, everyone. Welcome to my latest episode of my weekend market analysis series. As we anticipate the opening of the gold market tomorrow, we are going to be reviewing the current market dynamics to identify potential trading opportunities for the upcoming week. You sure want to stick around because we've got a lot to cover, and I'm excited to share some insights that could be immensely helpful for your independent trading decisions. So, in this video, we will consider various components, including the key drivers influencing the gold markets, a technical analysis overview to identify major trends and key levels, and lastly, patterns and structures to guide our trading ideas. First of all, let's take a quick look back at the last week's action. Gold saw a strong bullish run, surging above the $2,400 mark thanks to broad based US dollar weakness, which allowed us to capitalize on some significant amounts of profits. Now, the chart you're seeing on your screen right now is what we were looking at the beginning of last week. And of course, as at the opening session of last week, price was around the 2,390. In fact, let me zoom in so we can see things clearly. And we were privileged to capitalize on this 400 pips bearish momentum all the way into structure, our key level and trend line. And of course, after noticing the emergence of buy pressure around this area, we did position ourselves above the 2,365, riding that momentum all the way into the 2014 area. And remember, we also had multiple entries along the way to maximize the potential of that bullish move. For educational purposes, you can find a detailed breakdown of each of our entry points in the description box below. Now, looking ahead, there is a strong speculation that the Federal Reserve might begin its easing cycle in the month of September, potentially extending the value of gold prices. Over the past week, market sentiment shifted after the Consumer Price Index data from the United States indicated deflation in the month of June, raising hopes for a rate cut in 2024. We also saw a positive news from the labor market with unemployment benefit claims coming in lower than expected. This means inflation is decreasing while employment remains strong, suggesting no imminent recession at this point. This puts us as at a pivotal point in the gold market. Now the big question is, what will gold do next week? Before we jump into the details, please note that this presentation is purely for educational purposes and not to be considered a financial advice. Forex trading involves inherent risk, so proceed with caution and always seek advice from a qualified financial advisor before making any investment decisions. With that said, let's dive right into the business. So, as usual, our first point of contact will be on the daily time frame. And for those of you who have been with me for a while now, you will be familiar with this current structure. So, for a while now, we have been taking into consideration the character of price action since the month of November of last year. And it's quite clear that the market has been very bullish. And to further emphasize the strength of the buyers in this market, we took it a step further by connecting the series of higher lows here, giving us a couple of ascending trend line to work with. And of course, you know how we use our trend line. As long as price remains above the trend line, we want to be looking out for patterns and structures that support the idea of buying. And we will not be considering selling unless this ascending trend line are breached and broken to the downside. Now, zooming into this current structure here on the daily time frame, I'm going to as far back as the beginning of the month of April, that's an historical data of about 2 to 3 months, you will see here that the market has been consolidating after testing that all-time record high at the 2,450, giving us a range-bound structure which further emphasized the prevailing uncertainty in this market. Now, whenever we have a range bound structure like this, it tells us that there is an indecision, and what we usually want to see is price action either breaking down the support line to give us an opportunity to sell or breaking out of the resistance line to give us an opportunity to buy. Now, to help us navigate this current market structure, we need a key level which will be playing a significant role in guiding our trading decisions for next week. And that is where this $2,390 level comes in. And of course, you know how we use our key levels. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. And if price drops below the key level, then we can start considering selling this asset. Now, as we prepare for next week, the question now is, will the bullish momentum continue in such a way that it breaks out the all-time record high at the 2,450? Or are we going to see price break down the ascending trend line, maybe to incite a temporary decline, maybe into the 2,380, or even breaking down that second ascending trend line? Now, to navigate this current market structure, I have a simple trading setup on my 4 hours time frame. But before we scale down into the 4 hours time frame, it's important for us to keep tabs with the fundamental factors that will be influencing the sentiment in this market. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, giving us information and timing to position ourselves in such a way that we can capitalize on the next move. Now, based on the asset we are looking at this week, we are going to be focusing on high impactful economic features from the United States economic docket. Now, for this week, we only have one high impactful event. In fact, this week is laced with fewer economic features to look out for from the United States. And the first one here is coming in on Tuesday, July 16th, and we are looking at the retail sales data. The retail sales is also considered to be a key economic indicator that measures the total receipt of retail stores representing consumer spending. And it also provides us with an insight into the health of the economy and consumer confidence, influencing expectations about future economic growth. So, we're going to be looking forward to this data to give us an insight into um, what is likely going to happen during the course of the week. So, we are going to be marking this out down, and this is the only event we are looking out for this week. So let's scale back down into the 4 hours time frame where I do have a simple setup. So right here on the 4 hours time frame, after considering the character of price action for about 4 to 5 weeks, this is what I am looking out for. And if you look at this closely, you will see a converging ascending channel. Now, connecting the series of higher highs here, look at the resistant line of the channel. And then when we connect the series of higher lows, we have the support line of this ascending channel, as you will see here. Now, since price still remains within that ascending channel, it makes a lot of sense for us to look out for patterns and structures that support the buying ideas. Now, zooming in, you will see this is the key level right here at the 2,390. And then we have the highest point here at the 2,425, giving us a range bound structure. Now, this begs for some patience here. We want to see how the market is going to react to the range. Are we going to see price break out of the 2,425? Well, a breakout of that structure will definitely welcome more buying opportunities, as price would have broken out both the 2,425 and the resistant line of this converging channel we have here. However, we cannot ignore the potentials that sellers could also come in, as we may see this whole consolidation transition into a reversal pattern in the form of a double top structure where the 2390, which is our key level, will be serving as the neckline of that reversal pattern. And if you look at this closely, you will see that that key level also shares a beautiful confluence with the support line of that ascending channel. Now, a breakdown retest of the structure will be a good confirmation to join any decline to the downside. So, this is where our center of focus will be for next week, right within the 2425 level and the 2390, where depending on which direction the market breaks out of will be giving us an idea of where price is likely going. But trust me, I will be with you in the comment section of this video on Monday morning after monitoring price action around this area during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders we may find the material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.